yesterday, before we go into this day's inflation reading, inflation came in higher than anticipated, but unemployment claims came in worse than expected. So this created like this weird mixed day for a lot of markets because you got something positive, something negative in regards to the dollar's price action. So today we've got the producer price index, which is coming in about 10 minutes or so. Producer price index will have potential to move the markets. I will say this, yesterday's CPI report was not incredibly market moving like it has been in recent years. Like the CPI seems to have lost a little bit of its all importance. And if you're asking why that is, why is the CPI like cooled off in terms of its like potential threat to volatility? Well, I would say it's because the Fed themselves seems less, pressed over inflation right now. Inflation a couple years ago, people were freaking out. Now inflation's like, it's come down a long ways, so it's not as important. What is really important, I think, to this market, most important two things to the stock market, I would say, is jobs and earnings. Let's just put E for earnings, company earnings. Where we're at with the stock market is sitting just shy of all-time highs here still. Here's your daily chart view of the S&P 500. Looks really strong overall. Bit of a slow period here recently. We've lost a little bit of momentum, just kind of going sideways. I think we're waiting to see what's next for for the data. So if you start getting cool economic data like weakening data, it actually, I think, could act to put pressure on the S&P. But if you get continued economic positive outlook, we could rally into fourth quarter. And that's actually kind of where I lean. I lean in the direction that any dips are opportunities to stay long into year end. Because again, we can take a look at our heat map here with the Edgefinder's top setups algorithm. And what we could see here is that for the most part, economic data, in fact, let's map this out. I've got a cool tool here that you can use. If you're an Edgefinder user, head over to your data scanners page, stock indices, okay? And then look at this section right here. This is pretty cool stuff. This is one of my favorite entire utility tools of the Edgefinder is this stuff right here. So I can look pretty quick at like all the different economic data. So let's map this out. Well, jobs were good. Unemployment rate came down. That's good. Inflation came in slightly higher than expected. So that's putting a little bit of pressure on us there. Core didn't change. I'm sorry. It actually, it didn't change. It was forecasted to be 0.3, came in at 0.3. So no change there. That needs to be grayed out. I need to adjust that to do what it did here. Like if there's no change, make it gray. But retail sales been pretty good. Services PMIs were great. Manufacturing PMI is a little weak. GDP came in as expected. So this is, sort of a mixed bag here. We've got two neutrals. So if we count up what we got 1, 2, 3, 4 things that are just positive, 2 things that are looking a little more negative. Okay, so that leaves us with more of a economy's in a decent spot. Party can continue.
Market analysis, free trading courses, Edgefinder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Just a few moments to go. We'll talk about what this print could do. Let's take a look. It should be coming in now. All right, producer price index. Initial move here. Let's take a look. Dollar index is slightly lower. Gold is up. Silver is up. S&P, I mean, up a little bit. Nothing huge here so far. Dollar index is seeing some pressure though, taking out its last 3 hours of gains, which have been, this big pop, now dropping. Oil is up on this. S&P, let's put some figures on this. S&P is back to flat on the day. Nasdaq's slightly red. Let's see. Gold up 0.7, 0.6, 0.7, somewhere in that range. Okay, so let's go take a look at what the number is. Number came in. Producer price index year over year. Okay, they revised the previous one up. Numbers came in 1.8% compared to consensus, which was 1.6. So a higher read there. But then on the month over month, consensus was 0.1%. We got 0. So that's kind of cooler on the month over month. Let's see. Core PPI, excluding food and energy, 2.8% compared to 2.7%. They didn't revise the previous number. Okay. Oh, did they? Let me check. I think they did. Was it at 2.7 before? Sorry, revised from 2.4 up to 2.6. So, interesting. It actually seems like a... Let me just look at Forex Factory too to see what... Forex Factory is a little bit easier to read, I do think. Okay, so PPI came in, month over month came in low. So I think that's where you're getting the reaction. Core PPI, okay, here we go. Month over month came in completely as expected. So this is actually looking a little bit like some good inflation data. And so there goes the market. Gosh, it's got to suck to be a bear on the Nasdaq and S&P right now. It's got to absolutely suck. And I'm not saying that teasingly, because I've had my moments this year being bearish at the wrong time. But I'm saying that because, like, you had yesterday, if you were watching, well, actually gold too. I was bearish on gold. I just didn't take any trades. But let me show you this. So if you're somebody yesterday, you're like, the big CPI number comes out and it causes, this move, like that's all you got. And then you get one today and it's basically what I'm saying is that the NASDAQ, the S&P 500, these trends are so strong right now to the upside. Same thing with gold, to be completely fair. You heard me yesterday talking about possible sell setups. I didn't take any trades. I was waiting for some rejection off this area. I did not see it, so I did not take a trade. That wasn't the only reason. I also have several positions on right now. My account is very, very full of activity. So I was like, I'm only going to take this trade if it sets up perfect. Didn't quite hit it. So a little bit of luck in there to a degree that I didn't take that short setup because it was a short setup that I usually would take.
Yesterday, the numbers were hotter, but the thing is jobless claims was also higher. So I think that actually made the balance and we did not really see much of a move. So yeah, I'm actually bullish on so much of the pairs that we have. But at the moment, it seems to be a bit confusing because it seems like inflation is slowly pushing up again, and that might maybe force FOMC committee to pause with the rates. It's possible. So that will just make the market not to move that much. But we will see what will happen once time goes on.
I've seen that be a conversation going on. Is like, okay, now we're starting to see economic data is picking up. Could that hurt the story for falling inflation and hence the rate cut idea? And you've said that well. And I think that when we look at that, there's a couple ways you could potentially take that. You could take that as, well, that's going to hurt the rate cut story, and stocks are going to struggle because many companies are going to need rate cuts. Or you can kind of take it to the example that we had for much of 2023 and 2024, Kenzo, which was basically rates kind of were staying steady, but companies that had a lot of growth still went up anyways because they weren't dependent on rate cuts. Like, I'm thinking specifically about companies like Microsoft and Nvidia and companies like CrowdStrike and all these companies that have tremendous growth irregardless of what happens with rate cuts. And the concept there is going back to quality. And that's personally where I am most convicted in the markets is, the Russell or companies that need, more rate cuts in order to really go up, I think are a more tricky place to be. I think the easier one for me personally would be things like the NASDAQ, which has these big powerhouse growth tech companies that even if rates don't move, they're still going to likely continue to deliver strong earnings, and it could lead to higher prices for those companies. So, my take on it is that I don't really want to see rate cuts come in quick. I wouldn't mind if the dollar's trending up a little bit here. It doesn't scare me too much unless I was long like the Russell or real estate stocks, which actually, to be hypocritical, I actually am long some real estate stocks. But long story short, basically, most of my positioning is long, high quality tech stuff through the NASDAQ, which has a lot of growth, even if rate cuts don't come in. Would you agree, or what do you think?
No, I actually agree. I think at the moment we are on a process of like every company, if you checked from July up now, they all performed very well. So the story of rates cuts, at least they did cut the rates with a bigger number. So even though they might not really cut around November because of mixed numbers that we get from news events, plus I don't think it's enough. I think we're still gonna have retail sales, we're gonna have PMIs, we're gonna have advanced GDPs. So there are a lot of them, and it seems like today PPI, at least it was cooler. So going further, maybe next week they might also be going down. That might still force them to cut the rates. But even if they don't really cut the rates, almost all the companies are are performing very well, which is actually good. So regardless of rate cuts, stocks will mostly go even higher. But along the way, yes, we will see those slower moves where the market will consolidate here and there because of the news events. But after we're done with those news events, everyone will be focusing on those companies' performance. And most likely they are performing very well, which means if the companies are performing very well, we end up buying. So it means it's actually a good time for us to buy slowly, even if maybe 6 months in a row, even if they don't really cut, one way or another, they are going to cut. Plus, they actually, what I've realized is, even though inflation or let's say CPI is going down, I don't think it's gonna go like 3 months in a row, like going down. So one way or another, it's gonna go a little bit up. Another month is gonna go down. So at the end of the day, it's still going down, you see.
Yeah. No, I think, and that's the thing is you've got a lot of data coming. You've got the dollar on the rise here recently. You've got yields coming up, right? If we take a look at like the 10-year yield, which of course is part of the reason why the dollar is up, or the same reasons, right? Basically, the recent strength in economic data out of the United States is putting some pressure, but you kind of touched on it there. I mean, at the end of the day here, a lot of these companies are still delivering pretty good earnings. We do have an earnings season coming up, but the theme here, in my opinion, is that, and I've been in this line of thought for some time. If we go back to, let's look at NFP and we say, look, people are still getting hired. The jobs market is still staying in there. As long as people have jobs, and by the way, we also saw some good wage growth pickup. People are getting paid, people are they have jobs, they're getting wage increases, and by the way, on a CPI basis, that's higher than CPI, so people may have a little extra money in their pockets if this continues to trend this way. So then you look at it and you say, well, that boils over into company earnings. So, for me, it's like I look at this and I say, unless we see the thing that would break the story would be bad earnings. Like if you started seeing Apple, Microsoft, Amazon, Nvidia, Google, all these companies start to deliver disappointment, that would be a red flag, I think, to the NASDAQ, to the S&P, etc. But definitely for now, the path of least resistance, in my opinion, is to the upside. Doesn't mean it has to go up, but I do think that's where it likely will go, considering we don't have any life-threatening news on this rally. Like right now, we just don't have that. If there's something that comes in, and it can come in at any time, to change that, then us as traders, we can look to adapt, looking for lower lows, lower highs, breaks of structure, things like that. But we just don't see that, and trying to call when that will be is very difficult on the index, which has been so strong in this bull market the last few years. So we'll see where that goes. How much more room to the upside does this have? I mean, we've just been on like a few weeks of just upward momentum here. Do you think the dollar is still kind of bearish, or do you think we could continue to reverse this downtrend?
Yeah, unfortunately, I want to share my screen. I think maybe that might add over
No
load.
problem.
So, but it's fine. I will explain from your screen. So, I still believe we can still have a bit of a bullish momentum here and there, because not of maybe rates cuts and stuff, but I think investors, they start to have confidence on the US economy again. It shows that we don't really have any recession, which is good. And especially when we have tensions like this, obviously US dollar becomes also a good safe haven to actually buy some bonds and stuff. But I don't think we will see an aggressive bullish move going further. I think maybe along the way, maybe next week, we're going to have retail sales. Maybe they will try to push the market to go a little bit lower again, because even though it's going up, I don't really want it to be way too strong up, because that won't be actually good for other stocks.
Yeah, that's very true. I mean, the dollar index kind of making a move higher is okay, but a raging move higher would be alarming, right? Because then it would really cut the probabilities of rate cuts. The inflation problem may come back. Those are things that we absolutely do not want to see if we're talking about staying long. Things like the NASDAQ, the S&P, which took huge drops in 2022 from that rising inflation story. So real good point there on the dollar index. Dollar index being up a little bit is fine. Dollar index just massive uptrend would be alarming.
Yes, no, that's true, because if you checked, I think we had like NFP was higher last. I think it was last week, and now we have higher CPI. So all those actually boost the dollar, which is something that is good, but we don't really like way too positive news. We just need moderate news. And jobless claims, I think it was higher, but I think maybe it was linked to hurricane and stuff, because I think people are not going to work and stuff in the US, obviously. So I don't think that number will just continue to go up like that. So yeah, but I think we will see what will happen next.
Yeah, no, that's a good point about the unemployment claims, because you can see a very above this trend jump. And I do think that you're probably right on that. I know I've heard that as well, as like a little bit of an uptick due to the hurricane situation. So it is possible that number could correct back down next week and the weeks to come. These sorts of things, these sorts of events do happen in the world naturally, but then also, of course, they do impact our data, right? These tough things. The hurricane is tough in many ways, right? Or just you'll see these things happening, like things happening in the Middle East, or when Russia invaded Ukraine, the price of a bunch of like food items skyrocketed because Ukraine is like the breadbasket of Eastern Europe. So like these things have real world impacts. So definitely worth keeping an eye on, and also not necessarily not looking at this, but at least taking this with a grain of salt, considering that it is sort of an outlier data point. Is that fair to say?
Yes. No, you're right on that, because I think since it's a weekly event, that you can see the change that is not really normal comparing to other weeks. So maybe next week or the other weeks we might see the numbers trying to cool off, and that actually it will be much better. And yeah, I think this week we might have these mixed numbers, which at the end of the day might confuse a lot. But at the end of the day, I think we still have a stronger dollar, which doesn't really need to push even higher, because at the end of the day, we still need those rate cuts.
Open trades, I've got 4 long-term positions. You can call them long-term swing positions or position trades. So first one, I entered into the S&P to the long side here, basically just following the momentum. This relied very little on technicals. All I saw was this breakout of the previous high and executed. Very, very simple stuff. There's not really, as far as I'm concerned, anything that warrants shorting the S&P or anything that would even drive the S&P slightly lower, really, other than natural sort of market pullbacks. I'll go over some charts, chart requests in a moment. I'll just go over what I've got open. Still got the oil position from yesterday. I think I showed this one. So yeah, opened this one after we saw, the setup that I always tell you guys about. It's just the retracement into this fib level, lines up with previous structure through here, executed on lower time frame once we saw rejections, and then I scaled in again yesterday evening once we saw more rejections on the H4. So currently sat in just under 2% profit on this trade so far. We've got New Zealand dollar. So this one is, again, very unreliant on technicals. This was just driven purely by central bank divergence. So what we've got on the technical aspect is the low here being rejected along with this 200 moving average on the daily. I've got 2 entries here. It's 1% risk split between 2 different entries, so 0.5 each. Looking for this 0.55 level to get hit sort of into 2025, maybe Q1 or even the end of this year, depending on how volatile things can get. Relatively wide stop. Obviously, this is the daily time frame, so letting this trade just run, not interfering. And we've got a very similar position here on the dollar against the Norwegian krona. So I was speaking about this trade for months, been talking about it, and then I stopped discussing it because nothing was happening, and now finally managed to find an entry point as we are seeing this smaller downtrend within the overall uptrend. And the idea for this trade was to get in before the end of 2024, and again hold this one into maybe Q2 of 2025. So you can see again really large take profit here, and currently only got 0.6% exposure, so it's split between 2 positions here. So we've got one at 0.3 and another one at 0.3. But yeah, that's it. Nothing in terms of active trades or swing trades, day trades. Very, very flat at the moment. So one of the best watches I've got, or something I'm really anticipating, is the euro dollar here. So I'd love to get short on euro dollar. And the reason is, again, we've got central bank divergence. So we've got the European Central Bank that is projected to cut rates much more aggressively than the Fed. And the Fed, I think, is going to take a much more relaxed approach. So we did have the 50 basis point cut in last month in August. Now, from the data that's come out, we had a great NFP, we had good unemployment. We also had FOMC yesterday. I think it was yesterday, or was it Wednesday? Can't remember. And that one didn't sound super dovish either. So yeah, relatively solid trade idea. It's just how do we get the entry here? Because we are relatively oversold. In my view, it's very extended to the downside. I mean, look at this run on the H4. I am expecting some sort of pullback, and then I can trade it back down to this sort of area here where we had NFP in August. NFP in August. So yeah, we'll see if we can get into that one maybe next week or the week after. Euro Swiss is one I'm looking to get into either today or on Monday. So this one is looking very good so far. Now, again, I'm relatively bearish on the euro. We've got pretty weak Eurozone data. Again, we've got the ECB looking to cut rates relatively aggressively. And we do have the Swiss that's stable, acting as a safe haven. And it's also risk aversion if we do see tensions increasing, or we see some sort of catalyst out of the Middle East. This would be a great position to be in. So I'm just waiting to see how this sort of H4 candle develops. We are currently rejecting this 50% retracement level. And again, this lines up with level of structure through here. So just looking to target sort of the previous low down at 0.92. So very, simple stuff. What's your view on the DXY, pound New Zealand, pound dollar? Okay, so the DXY isn't doing too much. It's clearly gained strength since, we had consolidation around here. We saw the pricing in of 50 basis points. We saw the unwind of carry trades. And as soon as we got the 50 basis point cut, we just consolidated on the dollar. Nothing actually happened. And since then, CPI previously came out flat, or, same as before. We had NFP come out positive. We had unemployment come out positive. We had the unpricing of 50 basis points. So more of a pricing towards 25 basis point cut. And since today's data, we've not seen much of a reaction. So overall, I'm still quite bullish on the dollar for now. Obviously, we need to take it on a data by data basis. But yeah, at the moment, the dollar looks quite healthy. So pound New Zealand, I think I was looking at pound New Zealand this morning, actually. Let's see. Where's it gone here? Yeah, it was. So if we look, technically, it looks really good to go in for a long position. We've got level of structure through here. We've broken above, come down for the retest. So a very classic break and retest sort of pattern here. Now, depending on how you draw a fib, this is a little bit discretional, and maybe I'm sort of cheating it. But, if we try and maybe force it, it does work here. And we do have the H4 moving averages that look quite bullish here. We've got the daily time frame bullish. We've got the weekly bullish. The problem is, I'm just not super happy with the situation that the pound's in. Whereas the New Zealand dollar, it also isn't in a great position. So it's, you've got to look at it in a relative aspect. How does the pound look compared to the New Zealand dollar? Would I be willing to buy it? Yeah, maybe I'd buy this market. But overall, not in a huge rush. And it's not something I'm dying to get into right now. I'll have a look at pound dollar in a second. When you scale, do you use the same SL as your original entry? No. So I can show you how I scaled into oil, actually. So this is the live account on MetaTrader. You can see the positions I told you are running here. So we've got New Zealand dollar, we've got the S&P, we've got the dollar NOK, and we've got oil. So oil originally, you see I had a buy entry here that got stopped out, entered straight away after, once I saw the rejection of the pivot point, and I moved to the upside. So trailed the stop on the initial entry right before we had CPI. Luckily, not luckily, but it worked out quite nicely. We continued to the upside. Now we're consolidating. But for the stop loss, moved it to exactly the same place as my trailed stop. So if one position stopped out, they're both stopped out. And this just helps mitigate some risk. So, if I wanted to, if I put it into the other position, it'd be right down here, which I really don't want to do. So yeah, both stop losses in the same position, if that makes sense. Yeah, okay, so let's have a look at, what was the other one? Pound dollar. Pound dollar, here we go. So it's kind of the same situation that we've got with euro dollar, but I'm just not as happy with it in terms of the central bank situation. The Eurozone is weakening much more than the UK. Don't get me wrong. The UK is still not in a great place in terms of the economics. However, it's holding up a lot better than the euro. So if you're going to go short on pound dollar, you may as well go short on euro dollar and leave pound dollar to do what it does, because there's just more potential within euro dollar, in my opinion. We also do have this technical level here on the H4 that's acting as support at the moment. So, I wouldn't really want to sell into this.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.